Hi, Professor. So today I want to talk about the company AMD, a company that I personally invested and I also own several of their products in the past few years. So AMD is a supplier of CPU chips. You probably have the Intel chips, and there's probably an Intel chip in your computer right now. And AMD is an up-and-coming competitor that has been seeing a massive growth in the last few years. The company was founded in 1969 by Walter Sanders, and then the company goes public and begins to make computer chips. So since 2017, the Intel has lost about 10% of its PC CPU market share to AMD. We can see from this graph that AMD jumped ahead of Intel in making CPUs a smaller node size. The lower nanometer number means better performance and higher efficiency. Also, the average selling price for Intel is a lot higher than AMD, as demonstrated by the last third graph. Since late 2014, AMD's revenue has been seen increasing for 5 years, so does its gross margin. It also reduces debt considerably. Its operating margin is under 10%, which is pretty low due to its aggressive growth compared to Intel's operating margin at 34%. Again, this all demonstrates that AMD is a growth company. When I took a look at its operating expense, what I found that AMD spent roughly around 1.5 billion into R&D. If you divide that by its total revenue, we get about 23%. This is essentially meaning for every dollar it earns, it invests about 23% cents on dollar back to the R&D, which explains why its operating margin is so low. So from its return of equity, we can see that the amount of profit generated by the company with the money invested by the shareholders is growing, and its D ratio shows that the company tends to lower its debt in the past 3 years, which implies that the company is getting better regarding its financial health. Lastly, its current ratio is growing for the most time, demonstrating its capability in meeting the short-term obligations. So AMD was the top performing stock in the S&P 500 last year, with a return of 148%. The fact that the AMD has a P ratio of nearly 190 by last weekend tells me a lot more that the company's future growth is already baked in its stock price. Also, given its P ratio is ridiculously high, it's safe to assume that the inside of the company are selling their stock, which they actually did, as demonstrated by the last graph. You can see that their CEO, their executive vice president, and senior vice president are selling their shares. So if you use AMD's market cap divided by its earning, you will get a number of 194, which means it's going to take AMD 194 years at AMD's current earning to make up the valuation of this company, which is ridiculous. Also, notice that Intel total assets nearly 20 times of the AMD, but its market cap only 4 times of that of the AMD. Therefore, I end up with the conclusion that AMD is currently traded at an overpriced value and may not be a good time for investor to invest in right now. But considering it's better than average market return and the company's good overall financial health, and also its technology potential, I would like to recommend AMD to long-term investors in the futures. Thank you, Professor.